Is it a good time to buy Meta right now? This is not financial advice. This is educational research only. Meta is getting a lot more interesting again, and there are two big reasons why. The first is AI. Meta just introduced MuseSpark, which it described as its most powerful model yet. The company says it already powers the Meta AI app and website, and that it will roll out across WhatsApp, Instagram, Facebook, Messenger, and AI glasses in the coming weeks. That matters because this is not just another vague AI promise. Meta is putting a fresh model into its actual product ecosystem, and that gives the market a real product catalyst to focus on. The second reason is that Meta is still spending aggressively to support that AI push. Just this week, Meta expanded its AI cloud partnership with CoreWeave in a fresh $21 billion deal, adding more infrastructure capacity through 2032. So when you step back, the message is pretty clear. Meta is trying to strengthen both sides of the story at the same time, the product side and the compute side. That keeps the company firmly in the AI race, and it helps explain why the stock is back in focus. Now, this is where PreTradeIt helps, because the question is not just whether Meta has good news around it. The real question is whether the stock setup still makes sense after the move it has already had. And from the broader view on PreTradeIt, Meta is starting to look more constructive again. The stock is sitting around $630.52, and that matters in the context of where it has already come from. On the dashboard, Meta is shown as 48.2% above its 52-week low and still about 20.6% below its 52-week high. So this is not a stock sitting at the bottom waiting to bounce. It has already recovered in a meaningful way, but it is also not back at peak levels yet. That is exactly why this becomes an interesting setup now. It is no longer a panic low story, but it may still have room if the broader trend keeps improving. The business still looks strong. The dashboard shows revenue growth at 23.8% year over year and earnings growth at 10.7% year over year. That tells you this is still a company growing at a healthy pace, not a story stock running on hype alone. Profitability is also still very strong. PreTradeIt shows profit margin at 30.1%, operating margin at 41.3%, and gross margin at 82%. Those are powerful numbers. In simple terms, Meta is still converting scale into real profitability, and that gives the stock a much stronger foundation than a lot of names chasing the AI theme without the same earnings power. The valuation side also does not look unreasonable for a company like this. The dashboard shows forward PE at 21.1x and trailing PE at 26.8x, with a PEG ratio of 0.83. The practical takeaway there is that the market is still pricing in earnings expansion, but the stock is not being framed as some wildly stretched valuation relative to its growth profile. Then the technical picture starts to matter. PreTradeIt shows Meta trading about 5.2% above its 20-day EMA and 1.8% above its 50-day EMA, but still 2.8% below its 200-day EMA. That tells you the short and medium-term structure has clearly improved, even if the long-term picture still has another level left to reclaim. So this is a stronger chart than it was near the lows, and it supports the idea that the setup is becoming healthier. Momentum also looks more balanced than overheated. The dashboard shows RSI at 57.5, which is basically telling you the stock has positive momentum, but it is not in some extreme blow-off condition. That matters because if you are evaluating whether the move can continue, you do not want to see a chart that already looks completely exhausted. The factor view is also supportive. PreTradeIt labels valuation as fair value, leverage as low, and the overall stock outlook as good. So again, the dashboard is not saying Meta is some dirt cheap bargain. It is saying the broader quality of the setup still holds together. So when you put all of that together, this is the broader message from PreTradeIt. Meta has a fresh AI catalyst. The company is backing that AI story with serious infrastructure spending. The stock is already well off the lows. The business is still growing. Margins are still strong. The valuation is not absurd relative to growth. And the chart structure has improved enough that the swing setup is now supportive. That is a much stronger message than simply saying Meta is good or Meta is risky. So is it time to buy Meta? From a broader perspective, Meta is starting to look attractive again. Not because it is sitting at some giveaway valuation, not because it has not already moved, but because the numbers on the dashboard show a company with strong fundamentals. improving structure, and fresh AI momentum all starting to line up in a more constructive way. That is exactly where PreTradeIt adds value. It helps you see whether the full setup is actually getting stronger before you commit capital. And right now, for Meta, that broader setup does look stronger than it did before. If you want this kind of structured pre-trade view before entering a stock, check out PreTradeIt. And again, this is educational research only, not investment advice.
If you enjoyed this breakdown, drop a like, subscribe, and let me know which stock you want me to cover next. And if you want to explore the data behind this analysis for yourself, check out PreTradeIt using the link in the description. You can sign up and use it for free.